Thank you, Shikha, for the introduction and setting the context. And I do understand that today, whole day, the panels have been talking about innovation and banking and financial services playing a key role in the economy. So obviously the innovation has to be brought in this space. The speed of change at all levels are challenging in the current state. BFSI industry is undergoing transformation, and it has to adapt to the changes that are spreading across multiple areas. So for example, customer experience, rapid policy changes, competitions from fintechs, there are insurtechs, aggregators, etc., new licenses, new business models coming up, increasing competition, and also macroeconomic policy changes due to COVID, deglobalization, etc. So what we see today is a very challenging environment for BFSI, and they have to play a critical role. So whenever government talks about credit uptake, bringing in innovation, reaching out to larger people, helping them to grow, and so the economy can grow. Now, with this at the background and as the context, let me welcome all the participants to this session and also all the esteemed panelists who will share their practical and pragmatic experience with all of you. So let me start with the first topic or the discussion points. So, and this will be open to all the panelists, and I will start with Pradeep. What are the innovations in your view which are going to have a significant impact on the BFSI industry beyond 2021, on which you can bank the future of a BFSI industry? So over to you, Pradeep.
Thanks for that question, Ashim. I think, and I was just thinking through as you were asking me that, I think one of the things that we all would agree, and that we don't need to prove here, is that tech is pretty much an essential component in all the sectors, right? Whether it be BFSI sectors or otherwise. What is going to be that change is going to be innovation. So I remember someone saying that, bank, for that matter, in industries, and it's like an arms race, right? Where innovation is that thing that is going to separate the winners from those who don't make it. So that is the importance that we have with innovation as such that comes in. Now, what does it mean in terms of real life? Well, one of the things that we have been seeing is that as far as innovation or that impact is concerned, we will be moving from a very transactional based system to this overall experience as a data point. Right? And I think that is key. A lot of the things that we see, at least within the banking world, is going to be primarily revolving around that concept. And again, increased data availability. Today, there's a lot more data available than we did in the past. So that's going to help us create new revenue streams, ability to help customers. So that's one thought around innovation. You'll also see a lot from the tech perspective. And again, coming from my world, I would see that the ability to interface financial technology with third-party systems, that's, while it was always possible, and it's always something that we will see a lot more of it in the coming years. So that's just my take on some of this.
Thanks, Pradeep. Moving to the life insurance sector. So I would invite Mr. Dipu for his view that what are the innovations that you are looking at it?
Yeah. So see, I'm from general insurance, non-life. Yeah. And there are two perspectives here. I think, Pradeep laid the context quite nicely. One is as you get into an increasingly digital way of working and customers get used to digital servicing across the entire spectrum. One thing we've seen from experience as well as research is the need for this servicing to mimic a human experience to the extent possible. So that's clearly, one thing which is coming into play. So how do you blend the science of technology with the art of customer centricity to make it human-like, for the customer? So that's clearly one area where we see a lot of innovations. The second area where, especially COVID-19, has been an accelerator is if you look at UI UX today, it's largely becoming touch-free. People are very wary of touch today. Nobody wants to press, the button in the elevator. Nobody wants to press the key in the ATM. So how do you leverage, a touchless UI UX, to ensure that you focus on customer hygiene as well as give world-class service? So whether it is leveraging voice, whether it is leveraging barcodes, we see a lot of innovations coming out on that front.
Thanks, Dipu. So till now we are hearing about experience. We are talking about customer centricity embedded or supported by technology, and touch-free is the new buzzword of the era of COVID. So let's move to Nitin. Nitin being the group CIO and president for the Edelweiss Financial Services, which is a conglomerate in financial services. So what's your view, Nitin? Because you are kind of exposed to both life, AWM and NBFC. So what's your viewpoint, what you're thinking about innovation to lead your organization and also from the industry perspective?
I think Pradeep and Dipu has pretty much covered it all in terms of innovation. I think whatever we talk about, whether it's data, machine learning, the throughput of transactions that customer want or hyper personalization, I think they're all here. I think we are in that middle of thing. It's not post 2021 because your question was post 2021. I think we are in the middle of that cycle where this acceleration and change will happen continuously. I think the one big change from a customer perspective where companies would have to kind of innovate themselves would be around the ecosystem play. I think Pradeep just touched upon it. No more customer is looking for an individual solution. He's looking for that experience which will be driven by some services which Dipu may be providing and some services which Pradeep will be providing and some services which Byju will be providing, and giving a holistic solution experience. So I think we will see a lot of innovation coming in from the industry where a package from multiple solution providers will be orchestrated to give a holistic view to the customer. And I think that's the biggest innovation. And to make that happen, all of us will need to change our product construct, our acquisition channel structure, our risk strategy, our operating model. And I think these were the innovations. So I think the whole experiential economy which customer is going through and the experience the customer is expecting and some of the platforms are able to provide, I think organizations will have to play into that ecosystem, and your ability to play in the ecosystem will be defined on how you are set up with your various strategies.
Thanks, Nitin. And definitely you have brought in another point out here, ecosystem, which we'll discuss in detail as we go along this discussion. Moving to you, Byju, what is your experience on the innovation that the life insurance sector is seeing currently, domestic as well as?
Sure. Thank you. I think my co-panelists actually covered many things, but I just add 2-3 things. Why? See, financial industry was actually doing innovations, but all the innovations are within the company walls. I mean, every company used to do innovations on their internal processes, focusing on customer experiences. But like Nitin said, now it's a co-innovation time. That means innovation cannot be just within the company. It has to be customer-centric, customer-focused. So we all have to come together, banking, financial, and NBFC, because as a customer, he holds many products across industry vertical. So we need to come together to build innovation which actually meaningful for that customer. So I'll give you some very simple examples how things which I see forward is fintech will drive new business model for sure. So we need to, how do we engage with them and how do we wire with them to reach the customer is going to be one key. Second thing is the sharing economy is actually there today, and you can see in automotive, and this is going to be the way it's going to be in financial industry. It's already there, but it's going to drive the way our the innovation on those areas. Third one, I'm sure in some time blockchain is going to be, it's very near, blockchain is going to be building or supporting this ecosystem fueling to ensure that we don't worry about who's transacted, which partner has done it. So we will be just keeping it open. The blockchain systems or the cryptography will help us to fuel the ecosystem building. Moreover, a collective building of customer intelligence. That means all of this in the industry today, we are here today, all of these companies putting together has to build a customer intelligence and then ensure that we propose right recommendation irrespective of which company's product, okay, to the customer. And coupled with all these advanced technology which is built in to support this customer journey is going to be the key, in my view. Yes.
Thank you, Byju. And you have brought a very good point that co-creation of innovation is something which has to be taken forward by all the participants. Now, let me extend it further to Murali, because he is a solution provider to BFSI industry, and his viewpoint that how he is looking at it, supporting the innovation in this sector. Over to you, Murali.
Thank you, Sim. So the way I see it, and I think Pradeep, Dipu, Byju, and Nitin have covered many of the points, but to bring it all together, I see really 5 trends in the banking technology sector, at least. The first is a secular move towards cloud banking. I strongly believe that the Kodak movement for legacy banking technology is now. I'm convinced that it's time for banks to think about cloud banking platforms with integrated and yet modular but cloud native stacks to replace their existing legacy systems. And I can see that there is a singular shift globally towards adopting cloud-based banking stacks to replace their existing systems. That's the first big trend I'm seeing. The second is that on the back of this cloud banking technology, personalization at scale. What I mean here is that with a wealth of personal data now being available via customer consent, we foresee that innovations in AI and banking technology will allow banks to offer hyper-personalized services to their clients at a fraction of the cost that they probably incur today. The third, I think, there was this reference to what we call ecosystem banking. And so we have come up with this term called embeddable banking. And ecosystems. What we mean by that is that at Zeta, we strongly believe that banks are increasingly taking on an ecosystem approach to distribution of financial products. So fintechs cannot, change the world by themselves. Neither can banks. Therefore, ecosystems have to be created with embeddable banking, where fintechs cooperate with banks to create new user experiences. The fourth is obviously digital onboarding. In the world of COVID, we see that the RBI has been at the forefront of some of these regulatory changes which are facilitating this move. For example, the advent of video KYC, for example. So we see that digital onboarding will become a mainstay of the way customers get onboarded with financial services financial services firms, and people walking into branches is going to be a thing of the past for sure. And last but not the least, contactless payments and digital payments are here to stay, and I think that India will leapfrog at least 4 to 5 years, in my opinion, in terms of the adoption of contactless payments. So in summary, these are some of the 5 big trends that we see in terms of innovation in the industry.
Thanks, Murali, and thanks, panelists, for sharing your initial view. Now let's move to the specifics of innovation. And now let me pick up a very controversial topic on which we always have opinions on both sides of it. Now, digital currency, we have been seeing that it is now at the peak. If you look at the Bitcoin's valuation, or if you look at Central Bank of China is coming up with its own digital currency backed by the central bank, and other countries are also taking initiative on that. So what do you think? Is it going to be the norm? Is it going to be a disruptor in the whole financial sector, because the money movement is the key for all underlying transaction? So Murali, I would like to hear your viewpoint on this, that whether you are in support of the digital currency or you are in having difference of opinion of it.
Yes, it's a great question, Asim. But like you said, I think several central banks, like in China, Singapore, etc., have announced projects which are related to digital currencies under various stages of development. At the same time, I think non-fiat digital currencies like Bitcoin and Ether continue to be popular as speculative investment vehicles, not necessarily propagating and driving commerce in the right way. They are probably doing or facilitating commerce in areas which are not particularly kosher from a legal standpoint, but they are obviously growing in value. I do not believe that in the immediate future we are going to see a plethora of activity on the regulated digital currency front end. There are 2 or 3 reasons why I think so. One, they are relatively complicated. For example, from a technology standpoint, they need to be cryptographically secure wallets, etc., and they make it difficult for hassle-free adoption by consumers like you and me. That's the first. The second is lack of acceptance infrastructure for them to be used as payment means for everyday transactions. And while fluctuation in value will mean that their efficacy as payment instruments is 100 rupees has to be 100 rupees. It cannot be 100 rupees on one day and 80 rupees on another day, right? So we have to see how all this regulatorily evolves over a period of time. However, I think the underlying technology is here to stay. And, like Byju was pointing out, the entire blockchain technology will be used by commerce. I think it will begin in the cross-border trade sort of world. It will move into the commercial banking space and then finally reach the consumers. So I think the technology will be in use, but I don't see yet at least a country like India being ready for digital currency anytime soon. So I'm sticking my neck out, but yeah, that's my view.
No, that's a fair ask, because Murali, you have kind of said that, yeah, the currency may be a question at this moment, but definitely not the technology. Technology can definitely support more innovations out here, where multi-parties are involved in the FS sector. Now, let me bring here Nitin for his viewpoint from the other part of the industry. So what's his viewpoint on the digital currency supported by the regulators?
So I don't know what's the timeline we're looking at, but just take a 30 seconds. How do I look at this currency? See, India, the world technologically went through 3 revolutions. There was a voice revolution when the phone came in. It allowed voice to transmit seamlessly, cross borders, instantly, without any intermediary, right? That's the first revolution. Then you had internet, which allowed data to transfer cross border seamlessly without any intermediary. And you know the revolution that brought in. What is a cryptography or cryptocurrencies allows the money to transmit in that same fashion, automatically cross-border instantly, right? So this revolution is too huge to be ignored in terms of what will happen. Now, whether, and if you look at some of the perspectives today, when you look at things like AML or who's the owner of the money, in a good regulatory environment, a digital currency becomes the best way to actually monitor even a movement of money or the AML activities that we are talking about. Because a physical currency, you don't know whether I've given to Murali or Dipu. It doesn't know the change of hands. A digital currency actually leaves a footprint. So I think there's a lot of promise. How quickly the regulators come around being able to handle and put regulations around it, my view is it's going to happen fairly quickly. And I'm putting my neck out here is saying electric vehicles, while some of us thought about they're some time away, 10 countries have said they will go 100% electric by 2030, right? So how quickly can something change? I think jury is still out. And I'm saying given the advantages which are there, I'm not sure, how far are we looking out. It will disrupt the financial ecosystem. It will disrupt business model of the banks, and how regulators that handle it is something to be seen. But I think it's a huge potential. I think it will just change the way we are doing work today and the efficiency it will bring out. And some of the challenges I think Murali talked about, I think we've seen it with a lot of technologies. Anything innovation, when it goes to scale, the prices come down drastically. The speed of transactions move out drastically. Who thought about UPI can do an instant transaction in 3 years and get this kind of adoption, right? It was possible. So I'm saying it is possible, and I would never say no, and I would never bet against a technology innovation.
Thanks, Nitin, and thanks, Murali. That's quite interesting views on this particular topic. Now let's move to the next very widely talked technology, and from government to private entrepreneurs, everybody is having an opinion on it. And wherever you talk to the business stakeholders, they also have opinion on that part of it. So let me bring that topic to the table. So artificial intelligence. Now, artificial intelligence, NLP, ML, etc. are talked in the same breath. And is it going to be the future of BFSI organization? Is the organizations going to be centered around AI? And let me bring 2 views from here, one from the insurance. So I will invite first Dipu and then Pradeep for his view on the banking side of it. So over to you, Dipu.
Yeah, thanks, Asim. I guess the last 8 months have proved, how AI is really making a difference to various companies across the entire BFSI spectrum. And especially if you talk about insurers, they're investing significantly, in AI technologies. If you look at the last 3 years, 71% of them are investing in video analytics. 78% of them are investing in NLP and deep learning. 81% of them are investing in machine learning and embedded AI solutions. Now, if you look at the impact, Asim, of AI, it's across 3 dimensions. One, of course, is from a human perspective, because if you take out regular work, right, then human beings, can focus on the 20% of work which drive 80% of value creation. So that's clearly one area where AI is making an impact. The other, of course, is not just re-engineering, but reimagining, business models. Because when you apply intelligent automation, you can just get optimization going end to end. And thirdly, from a data perspective, we all have been hearing a lot about data in recent times. It can clearly help us illuminate dark data. Now, with this theoretical underpinning, just to share a couple of use cases. So, for example, if you look at our business, the claim is the moment of truth. Now, initially, what used to happen if, let's say, a customer crashes the car, you basically reach out to the insurance company, they will send a surveyor, the surveyor will then take a look, file his report, then you get into the entire process. It can take days. Now, by using AI and data analytics, we have crunched this from days to minutes. You take photographs, send it to us using the mobile app. The AI engine looks at it and then gets back to you with the assessment in a matter of minutes. You agree, and then the amount is transferred to your bank account. So clearly, difference coming in thanks to AI. Secondly, let's take, customer servicing. What used to happen earlier, right? Typically used to have only the call centers. So what we did, we figured out key drivers of traffic into the call center, and we built end-to-end digital customer journeys using AI. So today, you use the mobile app, you use WhatsApp, you use a bot, and the bot is AI driven. You get service in the same way. In fact, even the call centers are back. Our servicing still continues to be 80%. And one metric is that during this period, when customers used our digital servicing, our complaints came down by 90%, 90. So two use cases and the theoretical underpinning, I think, clearly it's here to stay.
Okay, so that's quite interesting with practical examples of that. Over to you, Pradeep, for your view from the banking side of it. How do you see AI impacting your business model?
Definitely. And I think I'm going to allude to two things. One that Nitin spoke about in the past, which is about the ecosystem and its impact, and what Dipu touched upon now, which is AI is not new. AI has been around for a while. It's a little bit more in the mainstream today than it needs to be. But AI is not something that will always interface with the customer directly. For great AI to penetrate that that customer interface or the customer interaction, you need to have great digital systems in place. And that's what I think. If you look at the mobile app that Dipu spoke about, this has got to go hand in hand. Now, there are enough, as far as banking is concerned, again, you will typically see that as far as the sector itself is concerned, you do have a lot of investments when it comes to fraud detection algorithms, when it leads to payments, to ensure there's constant monitoring of payment channels that are going on. So these things aren't there. It's not really something that's going to be unique. What could be unique is that some of the customer-facing applications, like, we've seen implementations. We ourselves have an implementation of what we call Pepper the Robot in our branches sometimes, where you can get frontline staff can be in, or bringing in the use of wearables where we can actually detect certain situations that are in, or if the customer journey, as far as the customer interaction journey itself is concerned, you can use some of these digital devices to start giving you insights into when you need to be there and how those things play out. So that's key. As far as investment itself is concerned, I see banks making a lot of investment in this space, right? I think this is something that is here to stay in terms of its ability to control the customers, and there's no taking away from that at all. So that's our take.
So I just want to add, Asim, I just want to add a couple of stats to this. I think there's some statistics to show that 75% of banks with asset sizes greater than $100 billion have implemented AI in some form or the other, or in advanced stages of implementation. And for banks which are smaller than that, I believe 50% of banks have already implemented AI. That's the statistic, pure numbers game. So everyone in the banking industry at least is adopting AI. And the other thing is that the three areas that we see where AI and machine learning play a big role. One is in this area of customer service. The second is in the area of fraud and transaction risk management and loan decisioning or underwriting broadly. And the third area is around hyper-personalized services that you can provide as a customer to your customer, because of the fact that you really can anticipate what the customer is really looking for. So that's what we at Zeta are at least focused on from an AI and ML perspective as well.
So one question to you, Murali, on this is that how closer it is to understand the behavioral aspect of human being, because that is something which is the pinnacle of AI.
Absolutely. So absolutely. The more data you have, the more you're able to predict what the customer really wants, Asim. So this entire concept of hyper-personalized services that we offer today off of our platform focuses on the fact that we use your history to predict what you may be looking for in the future as well. So that's the idea. So for example, if you have developed over a period of time at a simplistic level, a pattern where you tend to go out every Saturday to eat, for example, then how can we make use of that information to make available and offer from neighborhood restaurants based on where you're located at the time of your choosing, right? So on a Friday evening, you will see that on your mobile app, an offer pops up from a neighborhood restaurant saying that, Asim, why don't you go here for some fancy food? So that's at a simplistic level what we do with marketing type of offers. On the risk and AI type of, I think there it's actually more profound, the impact of AI and machine learning, because of the fact that your the way that, for example, the way that you authenticate yourself using Face ID or using biometric impressions on your phone, and the pressure that you apply, etc., can be understood using AI and machine learning to make sure that tomorrow when I am trying to impersonate Asim to attempt a fraudulent transaction, the fact that a different pressures level was applied by me instead of you to authenticate a transaction can determine that it's a fraud. So it's actually, the gains can be mind-boggling in our view in terms of what AI and ML can offer from a risk perspective.
Sure, definitely. And I think that's quite interesting.
Slightly different.
Sure, Nitin.
It is, since humans don't act logically in all scenarios, AI will never be able to catch up with you. In all scenarios, AI will have beaten you.
Definitely, I take that. And that was, yeah. So fine, let's move ahead with that. And we initially discussed about the ecosystem-based partnership. Now, will it be the drivers for future growth? And let me invite Byju to share his experience and what does he sees in this and what are the final nuances of ecosystem partnership. So Byju, over to you.
Sure. So I think ecosystem was one of the high word anyway in our panel. We started with that. But today, I just want to summarize saying that having a partner ecosystem strategy is no longer nice to have, because partner ecosystem is a topic that is the top of mind of CEOs, or at least I am seeing from my company, it's at the board level.
Sure. Byju?
Yep. So high growth companies do not go it alone. Okay. So increasingly, we are achieving results by creating or orchestrating, digitally. So the connected ecosystems, which we actually discussed today, okay, coordinated networks, coordinated enterprises, and it's go beyond and finally reach our customer like we just discussed before. So I just want to take some examples here, in the insurance specific example, so that which I know very openly. So if I look at the example, offering a complementary offering, make it easier for a customer to obtain a comprehensive solutions to their problems. Is an example I wanted to actually paint. And classical example is China's Menon, right? So they realize its customers wanted not only insurance, but also means of addressing their medical needs, okay, and their well-beings around it. So actually it's created a branded called Good God, well-known, it's Good Doctor. So actually today, the Good Doctor platform offers 24/7 medical services, which is remotely, completely, telemedical, concept. And it provides end-to-end, they covered end-to-end supply chain, pharmaceuticals, hospitals, insurance service providers. I mean, completely cashless services opted there, including insurance. And based on advisory and the treatment, your payouts and everything happens to the ecosystem automatically. And today, I think in the 2020 beginning, I think March numbers is 37% of Menon customers, okay, adopted these services. And important measure of the ecosystem success was, I think 62 million customers actually been subscribed to this particular model in just 3 years after starting the Good Doctor, right? So what I'm saying is ecosystem, it's all about how do you create. I really believe in, the innovation is about, the creativity is the oxygen. okay, which we should breathe, and that we need to trust. And if you believe that creativity can, actually make a differences, we should go for it and get it done. I mean, there are so many examples which you can quote, but what I am saying is, really, there are untapped opportunities within this BFSI segment itself, which remains, and too many. But we are not hesitant to. We are hesitant to actually a little bit, align together. Let me put it in summarized form. Partner ecosystem, basically models are there, ambitions are high, but somewhere I feel as industry peer we are in the platform with confidence shaky. Why? What's the issue? So we don't know. There could be risk, there could be legal issues, or a customer data, who wants the customer data. So there are many other issues which is actually holding us to just go and tap this opportunity. I think, and just again summarize it, model is ready, ambitions of everyone is ready. No one actually hesitate to actually say this is an opportunity, but somehow we lack that coordination. I call it as co-innovations. That's the only thing which is actually, I think, we need to tap in.
Thanks, Byju, for raising it. And I can understand the one word that you were trying to look for was the trust in the ecosystem partnership, because yes, opportunity are there, capabilities are there, but somehow it is not taking up to that scale. So let me further extend this part of it. And we know about Ant Financials and which kind of controls the data. And it has been trying to provide a lot of hyper personalized products and services to its customer till now and before the things happen. So how will the BFSI industry be able to provide these kind of hyper personalized products and services to customer, because they are regulated, they have data related to their only transactions. So let me bring in Nitin to share his experience, that how does he look at this particular part of banking and financial services sector. Over to you, Nitin.
Yeah, Asim, I have a split view on hyper personalization, and I'm calling it personalization rather than hyper personalization and distinguishing them. I think in financial services there will be one level of hyper personalization, which is how quickly can I reach the customer through the channel where he's available at a point in time when he requires a service. And I think that's the biggest use case in financial services when you look at a hyper personalization. And that is whether financial services will do that or ad tech platforms will do that, and how financial services will leverage or monitor their customers to be able to provide that just-in-time product from their bouquet, and trying to recognize that fact is, I think that's a ongoing exercise which I know I've been part of for last 10 years, and we are seeing more and more improvement on that. I think Dipu touched upon that. Once that product offering is there, fortunately, unfortunately, in financial services, your product stack is not like a e-commerce or a Netflix where choice is so great in terms of millions of movies or products, where the product selection itself will become personalization. So there you will have personalization. I'm not sure hyper personalization is required there, but I think the ultimate North Star for that is saying how quickly can I reach the customer with a pre-filled form at the time of his need in terms of just in time. I think that's a limited experience, limited scope in terms of financial services, whereas the product selection scope, which is typically a large portfolio players like Amazon, Flipkart, Netflix would have, I think that is limited because, quite frankly, number of products by everybody put together is just limited in financial services. So we have to be, careful of what we call as personalization and hyper-personalization.
So Nitin, let me just extend that piece of it, because we have certain parameters or configurable parameters which can be personalized to each of the customer, and which we don't. Either we say he is credit worthy or he is not credit worthy. And that's a kind of a decision it is taken based on certain parameters. But these customer then go to the next level of whether it is microfinance or etc., or they go there and they take those credit at a higher interest rate, etc., which the banks or the larger NBFCs, which are highly regulated, etc., has not been able to serve. So it's not that there is not a demand in there, but somehow the construct or the restrictions that are there, or maybe it is induced by the industry itself on that, so they are not able to serve these customers. So that is one thing where I have always been deliberating, and we have been having discussions, and we give it fancy names. Yeah. So your view on that?
A choice. See, it's a choice. I can extend that choice to even saying we do a tier pricing rather than a, logarithmic pricing, right? I mean, potentially today there are models available that I can do a logarithmic pricing, but whether it is insurance, I think Dipu can, plot every customer on a scale and give a penny difference logarithmic pricing. And similarly, we can do it in credit as well. That I still say a risk pricing and what a company chooses as strategy rather than a hyper personalization, which I view it as more a customer choice and a consumption perspective. I think how much personalization will I do in my risk pricing? I think jury is out. I think beyond a certain point, the effort to do that pricing versus the uptake, I think is something is questionable in all scenarios. So you have to be personalized. Hyper personalization, when you say, I think the scope in acquisition and some of the risk strategies that you talk may be limited in financial services.
So I have a slightly different view. I mean, I think today is the day when Nitin and I are constantly sort of disagreeing with each other of few things. But Asim,
on the panel.
Yeah, so my view is actually slightly different here, Nitin and Asim. I am fundamentally of the view that it was legacy technology which prevented companies and banks and financial services industry from providing hyper-personalization to customers. I mean, a simple thing, Asim or Nitin, the way my mobile app should interact with me can be hyper-personalized, for example, right? So if I am using 3 features on my mobile phone application on a regular basis to transact with my bank, I should be only shown those 3 options in the beginning. That is hyper-personalization. If I can have integrated commerce experiences inside my banking app, there is no need for me to download an Amazon and a Flipkart and all of that. If I have a full-fledged marketplace for all my commercial needs within my mobile banking app itself. So the way we are thinking and we are redefining this entire concept of hyper-personalization from a financial technology space is that rethink this from a technology dimension so that the bank can use your past behavior to predict what you're going to be doing and make that as the reason for you to get a hyper-personalized experience. I think banking is the last bastion where this neo-stack-based technology like the technology that we offer will replace legacy technology and ultimately provide exactly what the customer is looking for, which is the hyper-personalized experience.
I think, Murali, I agree with that. So that's what I also meant in terms of in customer experiences and acquisition, you will need hyper-personalization. But when you come to a product selection, we are not a vast financial product marketplace anywhere in the world to say that I don't have 1 million shoes to select to actually offer you that shoe, right? So it's not a product selection, but on the experience, you will have hyper-personalization, but not on product selection. That's what I meant to say.
Sure.
Right.
So now let me extend this piece of it. So Murali talked about technology that it was limiting banks and financial institutions. So let me put this question. So what are the challenges being faced by the industry to handle the speed of change in the technology landscape so that it can remain competitive in the future? And let me start with you, Murali, and then I will go to the practitioner from the industry.
This is a classic and I referred to when I started off talking to on this panel today, I referred to the Kodak moment in the banking technology industry, right? Just to think about what is prevailing today in the legacy industry of large banks is that they have 10 to 12 systems interacting with each other to ultimately make available a consumer experience to me. They take a core banking system from someone like an Infosys or a TCS. They end up taking a card management system from somebody else. There is a third vendor who brings in a switch. There is a fourth vendor who does a payment engine, a fifth vendor who does an access control server for authentication. And there is yet another company which provides them with the mobile banking experience. Now, when the bank is trying to then stitch together a modern banking experience using all of these 6 disparate systems for the end consumer, what does happen, therefore, is a broken consumer experience, which, and you've read about all the leading banks in India, for example, having trouble with dealing with scale as UPI takes off, for example. So in my opinion, if in order to survive, they have to understand that the time is now to move to a completely new cloud-based, cloud-first, cloud-native technology, which provides for infinite scalability. They should look for a neo stack, which is integrating all of these different sort of modules into one modern banking experience for their customers. If they don't see the writing on the wall that this is the way to move towards the future, I have a feeling that they will be disrupted by the likes of Google and Apple, etc., who are really putting a complete who are putting where their money where their mouth is, and building world-class user experiences based on integrated technology for their end consumers. So the time for the banking industry is now, in my opinion, to adopt new technology, and in order to stay relevant 50 years from now.
So thanks, Murali. Quite a strong opinion and view on that part of it. So let me just extend it to Dipu. What do you see in the general insurance industry side of it?
Okay. So Asim, I'll just take the liberty of extending it, slightly beyond, keeping pace with technology to what we are seeing.
Sure.
The all-pervasive, digital way of working. To my mind, Asim, there are three, issues which can come up, and which players have to cope with. Firstly, you need everybody, chugging at the same pace. Now, when you're saying everybody is digital, you're talking about firstly, everybody, who speaks multiple languages, rural India, urban India, all players, everybody, all systems working, no glitch. So that itself, can be a bit of a challenge to ensure that the digital world completely replicates the physical world. Second is, while today everybody is talking about work from home, some new risks can emerge. The other day I was in a panel where somebody asked this question, and to which nobody really had a convincing answer. Physically, when you go to an office, you go to an office. But when you're working from home, can you give a guarantee that the guy is not working for two different companies? Right? So such risks can emerge. The third thing is, when we get into a digital way of working, what are the emotional and human fallouts, right? Because you're talking about people working, facing a screen completely from morning to evening, right? Not socializing. Therefore, be it, physical health, mental health. So I think some of those fallouts can happen later. We'll have to, think about them as and when they arise.
Thanks, Dipu. So let me just invite Pradeep for your opinion on how you are going to incorporate technology and the challenges that you are facing in it.
So I think between Murali and Dipu, they've covered most of the points. The one topic that I wanted to touch upon, Asim, which I think is very important, is actually non-technical. And that's the importance of culture in the way we go about some of these things, right? I think technologies have changed in the past. They do change today. They will continue to change. But how large financial institutions come to terms with assimilating that change, incorporating into the way they work, their ability to respond to their customer needs and so on. I think that makes a big difference in the way these technologies, and that's more, for want of a better word, that's more sustaining as a response strategy. And I think there's a lot of investments that is being made. A lot of people are talking about it because, and I think Dipu touched about it, saying that one of the things during the pandemic that has happened has been the large uptake of digital revenues, digital investments that have gone to bank and in general into industries to make those things happen, right? So I think culture plays a big role. Otherwise, yeah, I'm pretty much in line with what Murali and Dipu spoke about. I mean, those would be the response strategies in terms of changing technology needs.
No, thanks, Pradeep, because you brought two very important aspects of it. One is the culture aspect, and second is sustainable part of it. So that's definitely a good point for us to kind of ponder on that. So let me invite Let me invite just Byju on this, and what's his opinion on incorporation of the technology and the changes that he is seeing.
Sure. So I don't have much, but I'm just three points here I leave. One is, it's beyond technology. Technology is given. So managing appropriate monetization of, product and services in the given ecosystem is very important, because I believe having a right technology implemented rightly to place and to manage the monetization across partner ecosystem is it has to be automatic. Today we manage it manually. Reconciliation is too horrible. So having right technology implemented right way across a partner ecosystem is important. And how do we ensure that right products and right services are designed to customer in mind, is important. And creating flexibility within the partner ecosystem which we build, which actually should respond to the marketing changes which is happening or technology changes which is happening time and again. That is important because building an ecosystem is easy to do, but it's continue to maintain, continue to leverage the new technology or changing market dynamics is very key. And third one is, if that technology doesn't support MVP, so it's no good. That's my view. So we should have an ecosystem which is actually supporting MVP, implemented. That has been tested. That has to be the main, objective of driving this entire innovation across.
Thanks, Byju. And Nitin, just over to you to kind of sum up this. The Googles and the Amazons and the Ants of the world, they have sufficient budget to invest and they are kind of driving the change in the technology landscape. How do you see that financial institutions where core business is different from technology, how do they adopt to this?
Yeah, I think to the extent I would agree with Murali here in terms of the real threat in terms of technology is there for financial services, but I also wish that some of these companies get regulated by the likes of RBIs and IRDAs and their innovation go down by 50%, right? So I think we have to be sensible to that fact, which is there. While financial services has already shown a lot of innovation and progressive thinking, I think one thing which Byju talked about, where we need a real innovation and which is just starting, is how are we disintegrating our core systems? And I think that's the biggest bane of financial services, whether it is a core banking or a core lending or a core insurance systems. Wherever we talked about, I think that has seen the least amount of innovation. And that has seen the least amount of disruption. We have seen some stories of that, in developed market or even in China. But I think until we fix that right, which I think Murali alluded to, that is what I believe is holding the financial services back. And that is a work which as an industry requires some real work. And since these core systems are so embedded, today, if you talk about Pradeep to change a core banking, and I know a global bank, initially where I was, it was a 20-year project to change a core banking system. Now, 20 years, I will do 3 life cycles of the product itself, right? So I think how does industry move to that systems and how do they transition with their core banking or core applications? I think it still needs a lot of work. And that's what I would believe that is holding back the industry.
Yeah. So sorry, I'll just finish that. I think it's a great point that Nitin has raised. I just want to quickly take a minute. The way we think that banks should adopt new technology is by launching new age products on new stacks for digital generation of customers. Then over a period of time, they can move their existing customers into the new stack. That's the way we think about it.
Sure, thanks. So we are on the hour. So thank you, panelists, for sharing your views on innovation in the financial services sector. With open banking, API, microservices, artificial intelligence, a lot of things are happening in the industry, and definitely there is a bright future. And above and beyond, and this COVID has provided us an opportunity, although it has impacted everyone very hard, to kind of innovate, focus more on innovation. So thanks for your sharing your very open views, and also to the audience for kind of listening to us. So I will hand it over to Shikha. Thank you.